62% nationwide to ANC. It's not good, eh? They're hoping. If they got under
All right, good morning, everyone.
be in the 50s.
Let's get going.
SMK
Okay.
58.
All right, you looked last night's session. Sorry, let me just shrink that down a touch for you. You can see there that markets didn't really finish all that well in the States. Kind of just drifted down into the end of the session. I mean, not any big pullbacks, but obviously moved down into negative territory and didn't finish all that well. You can see there that we had very little leadership on the day. I mean, there wasn't a whole lot going on. With jobless claims that kind of came out slightly better than expected, but not enough to really push the market around. We're still kind of reeling from Janet Yellen. The one thing that does kind of stick out is that the Nasdaq down another day, almost 0.5%. The Russell was actually down about 1%. So, we continue to see the same sort of thing. Small caps and tech stocks getting absolutely beat up. And we continue to see the same pattern where there's absolutely no follow-through on into the following day. So there's very little leadership from that point of view. Any sort of follow through abilities there. But I think we're building up for something that could be very interesting over the next few sessions. If you look in Asia, like we said, like very little follow through. You can see the Nikkei was up small, Kospi up small, Hang Seng and Australia down small, and then China flat. Basically, we had some CPI numbers out of China that came in a little bit softer than expected, maybe reversing some of the losses earlier in the session in China on potential stimulus hopes, and we saw some of the casino and property stocks that rallied after the decline the previous day. But like we said, just very little to kind of go on. I mean, we're looking at just a total mixed bag. There's very little in terms of leadership out of Asia at the moment as well. Interesting little chart here from Jim Bianca, Credit Suisse, and just when you think that the smart money is smart, it's not so smart anymore. Going back to 2010, hedge funds in the States versus the S&P 500 total return actually have a negative return out of hedge funds with a 60% return out of the S&P. So pretty dismal from that point of view. If you look here, this is a little chart from Zero Hedge, and basically showing the central bank assets on their balance sheet, and just how it continues to run higher. I mean, we were flattening off and actually even falling at the end of 2012. I think that was the last real sell-off that we had after the last ending of call it QE2, and once we started to get the asset purchases going again, you can see how we obviously know what's happened with the S&P. So I think that that's incredibly significant. We're going to start to see that taper off a little bit now as we wind down all the asset purchases in the States, and I think we should potentially expect the average central bank rate to start to move the other way as well. And seeing that start to happen, that could probably be a catalyst and a bit of a tipping point for markets going forward. So we must just remember that, and we'll jump back to that when the time comes. We've got no real corporate action to report out on the day. I'm looking at a terminal right now. Goldfields was just cut to sell versus neutral at Citi. And then we've got PSG, which goes ex-div on Monday for 90 cents. All right, in terms of the corporate action out today, the market data out today, like we said, we had Chinese CPI and PPI numbers. CPI came in a little bit soft, maybe opening the door for some more small little stimulus programs there. We had SA gross reserves out at 8 here. I actually didn't even see what they were, and net reserves. We've got with the GE trade the German trade balance as well. We've got the budget balance from France. We've got industrial production out of Italy, trade balance out of the UK, as well as industrial production and manufacturing production. And then later in the States, we've got the Fed's Fisher that's going to be speaking on monetary policy. So nothing at all to really drive markets that is going to be coming out from this point going forward. So we're going to sit here and do what we've been doing recently, and that's watch trade action and see if there's anything to really give us an indication that the recent pattern might start to change. All right, if we get into the maps. We're going to start here by looking at this same chart that we actually looked at yesterday. And we came down last night, we retested it right at 101.50. 101.50 is the number we're going to want to watch for. 101.50 drops in the yen, then it could be good night nurse. And I think that's the kind of thing that can cause an unwind personally. We need to see a real reversal. We need to see an asset class really start to move hard. Could be driven out of currency land. Yesterday we saw another, staying with the currency theme here, we saw another important move happen, and we saw a major reversal. Obviously you can see by that chart there a total key reversal in the euro dollar. We traded up to just a hair under 140 at the beginning of Trichet's speech when he came out and said that they could look at cutting rates as soon as June. We had a huge reversal and really moved back all the way down closer to about 138.50 to close out the session. We're sitting at 38.30 at the moment, and if I back out here, we'll just have a little bit of a look on. Let's just shorten this up just a touch. We'll have a look on the significance of this level here. We can see that trend support from going all the way back to the 2 years quite a bit lower. But if we look in terms of a more recent support trend line on the euro US dollar, it comes in at about 138. You can see here this lines up kind of beautifully where we really broke out here at 108, and we've kind of just been wishy-washy in here between 138, mostly 138 and 139.50. This 138 I think is going to be a very important level, as you can see there. If we drop below 138, then I think we could get a real reversal in markets. So these are a couple things that I think we should be looking at the moment: the USD, US dollar yen, and the euro dollar. We get below 101.50 in the US dollar yen or 138 in the euro US dollar. Then I think that we could potentially start to actually see some asset flows start to really move, which we haven't seen in forever. We've just kind of been sitting watching markets kind of drift around, and very little movement in flows between asset classes. So I think this is really important. We're gonna monitor that going forward. All right, let's get into some of the local stuff. We'll look at Barlow's, which yesterday a trading statement came out late in the day, absolutely decimated the stock. It was actually trading close to an all-time high. It would have been a new closing high. It closed up there at 118. Totally reversed. We fell about 10% from highs to lows. And you can see there really just dropping everything. I think that we're probably gonna filter down maybe closer to this 100 level. I remember if you look at the chart, we had looked at this a long time ago. This 100 level is incredibly significant. And I wouldn't be surprised to see it correct down to there. It was quite a reasonable earnings miss, and this thing's run so hard. So a correction down to $100 would seem quite reasonable, and that is major support. So we definitely dropped some sort of support at 109. I'd maybe be looking for a correction all the way down to closer to $100 before I'd be interested in even looking at it. But I definitely think today that could be a second day play today. So keep it on your radar for the session. All right, so the next one we're going to look at here is MTN, which you can see really broke out above the 220 level yesterday's session. This thing's just been incredible. I think a lot of guys got short this after that really poor sales update probably 3 weeks ago, 3 weeks ago. You can see the reversal that it had, traded all the way down to about 206.50, I think, on the session, and spiked up, I think, probably more because the market, just has been so strong for the past couple weeks. And then yesterday, obviously, really caught a nice bid, opened up about $4 in the open and just never looked back. So this is a breakout with a monster target, to be totally honest. I don't think that the fundamentals are necessarily lining up with this one, but it technically is as clear as it gets. Breaking out here, and the target is definitely almost all the way up to $250. So I would say at least 240 on the near term on the MTN target. All right, let's look at Mr. Price. Mr. Price as well, shorten up here. Popping up yesterday on better than, maybe slightly better than expected numbers. What we're going to want to watch for here is the previous closing high, which is, let's get the exact number, 165.85 was the all-time closing high. We got through that yesterday. We pulled back below it to close a little bit below it. This thing's been running incredibly hard, along with a lot of the other retail shares. We're going to need to see this thing close above 165.85 for us to really want to look at this thing further on the long side technically. So watch that level today. If we get above that level and can start to push away from it, this thing could end up being a bit of a runaway trend as well. All right, we'll look at Life Healthcare, which also breaking out. Kind of quite a common theme in our market. If you look at it in terms of a closing basis, we had all-time closing high yesterday. We did have an all-time intraday high as well, and the same sort of thing. I mean, the target on this is quite big. I mean, we've been in this range. You can see here we've bounced in and out of this range, which is about probably a 7 rand range for the better part of a year, and the fact that we're just punching through it now, I think is significant and definitely looks like it's got legs to run a little bit more. All right, the last couple I'm going to show are some of the gold stocks, which have been whipsawing quite aggressively the last few days. This one being the king of the aggressive moves. We really saw a push for a potential breakout here above the 35 level, and it just totally failed it. It got traded up to 37. I think it closed the day at about 34. And then yesterday you could see that we really broke down. What we're going to look for here is I think a drop below the sort of right, the right side of this consolidation. It definitely looks very head and shoulder-ish. It's not that clean, and looking for the appropriate neckline is incredibly skew. So you'd be looking at probably closer to $30. I think that if we drop out of this little consolidation pattern here, which is literally only a few cents below where we are now, possibly below 32.30, then I think you can probably sell this one for a little bit more downside. I looked at a lot of the gold stocks in the States as well last night. A lot of the patterns looking very similar to these. This is AngloGold. AngloGold looks a little bit better, a little bit more symmetrical in terms of a head and shoulder pattern. Definitely a big failure from 3 days ago's session. It traded up to about 96. Yesterday we closed at 84.85, and we traded as low as about 83. Same sort of thing. I think we've got to drop probably the 180 level to really call this thing breaking down. And the great thing is, if we do drop 180, we've got quite a good level to look at here. Which is really where we broke up from. You can see how clean that was on the breakout when it happened. I mean, the thing just took off, and that's at about 164 rand. So if we drop 180, technically from the terms of the height of this channel, it doesn't quite get us all the way down to, it does actually. It takes us down to almost exactly 164, 165 level. So I like the way that this one looks. If we can drop 180, then I think we can see some more downside momentum in some of these golds. That's it for today, guys. Thanks a lot.